welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Executive Director of Global Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning.
It's another savage day. Let's have a look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is at $28,222. Bitcoin is down over 3% over the past 24 hours. The CoinDesk Ether price ETX index is at $1,933, so falling below that $2,000 psychological level. Tracking losses about over 10%. And the DFX CoinDesk DeFi index is at 124. Wow, DeFi is sinking over 25% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So another bad day for the markets, Emily. A lot of macroeconomic uncertainty or concerns over hawkish Fed.
Well, I mean, it's a bad day. It was an even worse night if you're, on the Eastern time zone. So went down to as low as 24,000, or around 24,000, which is sort of like 2020 level. So we are, it's pretty bad. And it's a sea of red across the board. I mean, it's really interesting how basically all these altcoins, or most of them, are moving in tandem. It does sort of challenge this idea that, all these coins are supposed to have very separate use cases and separate communities, because they're all there's a lot of panic selling going on across the board.
Yeah, Bitcoin even touched $24,000. But UST, the whole Terra Luna community, has also been feeling the burn. UST stablecoin is on a volatile ride, now trading down about 44% from its $1 peg. At one point, it was trading 26 cents over the past 24 hours. $11 billion in market cap erased from the board. Meanwhile, Luna is trading for pennies. It was trading over $100 in April. Now it's down 98% over the past 24 hours. It was a $40 billion market cap that was wiped, $40 billion in market cap wiped over the past month. Lawrence.
Yeah, and that's why we saw a lot of hurt in the DeFi market where UST was living. Look, again, if people had watched the show regularly and religiously, as they should be doing, they would have heard repeatedly that this was going to happen. I mean, this is like, come on. This was everybody saw this. But one of the things that was interesting was there was a great piece in yesterday on CoinDesk. It was a fantastic scoop that Do Kwon, the founder of UST and Terra Luna, in fact had a previous life and used the pseudonym Rick Sanchez. And now here's the thing that we found out in crypto: when you use a pseudonym and you start something sketchy, chances are your next thing is probably going to be difficult too. We saw that with the folks at Quadriga, who ended up going into other ventures that ended up losing a lot of people money. And this is the same thing here. So it's unfortunate, and it's unfortunate that these cults exist. But here we are.
Yeah, it's a pattern, definitely. And our first guest has been sounding the alarm on Terra Luna for months as well. He's been threatened, bullied, and chastised online for pointing out the flaws of the Terra ecosystem, but in the end, he was right, and folks would have benefited from listening to him rather than attacking him. Joining us now is Kevin Zhou, co-founder of Galois Capital. Hi, Kevin, thanks for joining us. So you saw this coming a mile away. Did you think it would happen this quickly?
Thanks for having me. I think overall, I didn't expect it to happen this quickly. I imagined that it might have dragged on for another couple of months. I think in the end, it was inevitable. But in terms of, just how suddenly it happened, and then just how quickly it played out over, 3 or 4 days, that was a lot quicker than I thought. And I wanted to even give them the benefit of the doubt that, what I was saying is that I didn't even think that this was purely just a bank run kind of problem. I thought that, even if it happened in slow motion, even if it was kind of like something like a bank walk, it was more about this thing not being solvent. So I could have seen this whole unwind happening over, a period of weeks rather than like 3 or 4 days. So it's been very brutal, very sharp. So in that sense, I'm a bit surprised, but I think overall, the thesis that this thing was unsound, that the mechanism was flawed, I think did play out as expected.
Maybe you can walk us through how you saw this thing triggered, because there's been, on top of that, so many conspiracy theories. I mean, even some folks are saying Galois Capital was behind the short sell. Other conspiracy theories are that Citadel and BlackRock were involved, but they have denied those rumors. They say they don't even trade in UST.
Yeah, it's probably not going to be one of these really large financial shops from TradFi. A lot of these guys, they have serious problems getting approval from compliance to even touch a lot of these kinds of assets, let alone something as bizarre and sort of not very mainstream, compared to Bitcoin and Ether as UST and Luna. So I think we're really in the phase of the market right now where there's been a lot of people hurt, a lot of people have lost their homes, lost tons of money, maybe their life savings, and they want to look for somebody to blame, right? And I think it's really easy to kind of like enter into this finger pointing phase in the cycle where everybody is sort of pointing outwards rather than, I think, looking within. And I think really what this thing was just a completely unsustainable, effectively reduces down to some kind of Ponzi. And I think really they should be looking at their dear leader, Do Kwon. I think they should be looking at within themselves. How did greed get this bad? I think when you look at this thing, and this is like even I would say months ago, even in November, I have some colleagues who are even tweeting about this. Even then, it was obvious. I think from a pure kind of rational and like pure logic basis, it was just absolutely obvious. But I think what made it not obvious is that just people kind of got caught up in the hype cycle. And then there's that element of, human psychology. There's that element of greed. And that kind of blinds us to being able to look at things, very objectively. And I think that's kind of what was going on. It was the age of narrative. You had these influencers on Twitter who were just shilling this stuff. And it was, backed by a lot of very reputable investors. And was very well financed with a lot of firepower, a lot of dry powder and capitalization. So, it was just a concoction of all of these bad things put together. And then, I think just kind of threw logic and reason out the window. So I think that's kind of what happened. It wasn't, it wasn't us. Certainly we participated in, shorting the market. But that was just, one part of, I'm sure, many people who were just dumping their holdings and shorting the market themselves. And I think really, it's just a kind of in a decentralized way. Everybody eventually saw the writing on the wall, and then everybody started to pile on. And at that point, it's pretty much irrecoverable, because at that point, the sentiment is so bad that it just causes the price to go down, causing sentiment to further worsen. And you enter into this kind of like, not even just a mechanical death spiral, but also a psychological death spiral. And I think that's basically what we saw happen.
Kevin, was one of the signs, at least, this whole initiative to purchase all this Bitcoin that, it seems like only yesterday, Zhou was saying he was going to be the biggest holder of Bitcoin outside of Satoshi. Do you think that should have been a massive red flag? Looking back, do you think that should have been a massive red flag to anybody who had put money in, or was it when the investors started giving him hundreds of millions of dollars to keep the party going?
Yeah, I think certainly that was a red flag. I think what they did there wasn't so much a bad move as it was that it signaled to the market that they no longer believed in their own narrative, which is that their entire mechanism is sound without collateral, right? But they're almost capitulating on their narrative by saying that, okay, we're actually going to go ahead and buy some external collateral to defend this peg in case something happens. It almost weakens kind of their position to even admit something like that. So, I think that definitely had harmed them in that way. But at the same time, I think it also helped them in a little bit in the sense that they did have some external collateral that did cushion some of the drop. It wasn't enough to stop, this death spiral, but, it was something there. And I want to say one other thing is that, right now we're seeing so much financial contagion across all these different markets, right? Not just UST, not just Luna. And I think some of the reason for that is that you have a lot of these big players who are, long Luna, who are leveraged long Luna, leveraged on, being long UST, have their money on Anchor, which is the bar lending protocol on the Terra blockchain, generating, fairly high yields for the current environment. And, these funds, I think at this point, maybe having these positions were getting margin called, and they had to sell off all their other good assets in all of these other, assets in crypto, Bitcoin, their Ether, all their other holdings in their portfolio to meet these margin calls. And this is why I think a lot of this kind of trickled out to some of these other assets, and there was contagion.
Yet we're seeing UST still alive. It's like Frankenstein's monster. I mean, this thing is still alive. It has something like $7 billion in value at the moment, or over the, about an hour ago. And yet Luna itself was about $280 million. So what's keeping UST alive? Like, how is this thing not dead yet?
Yeah, it could really be a couple of things. Certainly, I don't think, based on just the numbers, just the comparison of Luna's market cap to UST's market cap, that this price is justified. I think there's at least, I would say, $7 to $8 billion worth of bad debt within the system that needs to get flushed out. Now, the way that right now people are flushing it out is that they're converting UST to Luna. To $1, $1 UST to $1 worth of Luna, based on the underlying virtual AMM, the automated market maker, implicit to the protocol. But that can only handle so much. Even if you're minting, 1 million units of Luna every minute, there's only so much bid side liquidity on Luna. I think that's really what we're seeing, is that we're seeing the Luna price now tank to such a level that the exchanges have had to change their tick size for what the ticks will be for their Luna books. So, at some point, the actual fair value of Luna is going to drop, in my opinion, below a single tick, right? So if a single tick is like a penny, and let's say all of a sudden now Luna eventually drops to a point where it's less than half a penny, right? And rounds down to zero, then finally the entire bid side of Luna will be evaporated. It'll be a one-sided order book, only offers, no bids. And at that point, finally, this loop of, doing this arbitrage on UST and converting it to Luna will finally close. And at that point, I think we'll see a much heavier depegging on UST. And I don't want to say where I think the final price is going to be. I think that's a lot harder to say. But I certainly think that, at its current price of, what is it, like 62 cents, 63 cents, I think definitely a bit optimistic for just how much bad debt there is in the system.
Yeah, Kevin, I was just going to follow up on that. I mean, 60 something cents is obviously very far away from $1, but it's also pretty far from zero, which is kind of amazing. And I guess the question is there any universe in which they would be able to salvage this? I know this is highly, highly unlikely, but it seems like it's not zero either, right? Is there any world in which they would be able to restore the peg? Because there's definitely some sort of, magical thinking around this on the internet.
Yeah, I think to some extent, yes, and to some extent, no. So it really depends on what you mean by peg. I think really what they should have done is that much earlier on, they should have basically just completely revalued their currency and let everybody take a massive haircut, right? So now, and just repeg it and just say, well, now UST is no longer worth $1. We're going to repeg it at 10 cents to the dollar, right? And I think if they did that much earlier on, I think that at least could have relieved a lot of the selling pressure on Luna itself. Now, I don't know. I don't think that would be enough to basically save things, but I think that would be a fairly prudent course of action. If I was Fed chairman of the Terra chain, I would have done that long time ago. I would have been absolutely brutal and had a huge devaluation of the currency. But now at this point, what I would say is that we kind of just, at this point, we're just undergoing hyperinflation of Luna in order to support the exiting of UST. And I think right now we just have to let it happen. The Terraform Labs they have already come out with some proposals on what to do with the community UST. So some of the bad debt is just held by the community funds themselves, and I think about 11% of the outstanding circulating supply, and they're deciding just to completely burn it, as in just completely throw it away. We'll see if the proposal passes. I think that's good. It's not quite enough. That counts for 1 billion units of UST. So, still a lot of bad debt in the system, but I think, definitely a step in the right direction. It's just that at the end of the day, all of this bad debt has to get flushed out. And, we're still in the early innings of that right now.
Okay, so when all the dust settles, what happens next? What happens to this project? What happens to the team? What happens to stablecoins? What happens to the market? I mean, what is the fallout from this in your opinion?
I think the fallout is pretty negative. I mean, it's not just that I think everybody lost tons of money, but on top of that, this is going to invite a lot more regulatory scrutiny into our space. And I think, being crypto folks, we generally like the idea of, having self-regulation. We think we can handle ourselves. But, with something like this collapsing, you're going to have a lot of retail folks that get hurt and lose their shirts. So, some of them are going to go to the regulators and say, these wrong things were done to me. And then the regulators themselves are obviously looking for good excuses and good reasons to come step in and exert more control over the space. So I think overall, this will be quite negative from that perspective. But what I would say is that better that it happened now than it happened later, at a much larger scale. If UST was, 100 billion and there was 90 billion worth of bad debt, I mean, it would be a lot more devastating than basically what happened, here in these past few days.
Well, you alluded to this, that, Do Kwon has laid out a plan. He's proposed to increase the burn rate of UST. He wants to find more outside investment. And he also tweeted that as we begin to rebuild UST, we will adjust its mechanism to be collateralized. So it's kind of an admission that their algo stablecoin model didn't work. They're pivoting to become potentially a centralized stablecoin. I wonder what you think of this plan. At this point, what else can they do? I think it's not a bad plan going forward. It's just a matter of the implementation details. I think at this point, they've really learned their lesson. They're going to try and be as prudent as possible about it, and we'll see how it shakes out. I think, at the end of the day, in order for it to be collateralized, they actually need physical collateral. So I wonder how much of the Bitcoin reserves in LFG, for example, Luna Foundation Guard, is still remaining. Maybe that can serve as a soft floor of what the final value of UST will be. Maybe 30 cents, maybe something like that, really depending on, maybe 15 cents, depends on, how much reserves they have left. And then there's always the question of, well, if they don't have any reserves left, well then, where are they going to get all this collateral? Like, who will actually be paying for this stuff? Will it be financed through selling of Luna itself once things stabilize? Harder to say. And that being said, I don't want to be too pessimistic about Luna because I don't think, what I was saying before is, single tick above zero, 1 penny Luna for most exchanges. I think that's just in the intermediate. I would say that's when UST is still unwinding. It's still going through hyperinflation, still trying to digest this bad debt. Yeah, I think it'll touch that price. But I think, much afterwards, then we're going to see some true price discovery because, at the end of the day, there is some kind of conflict between the UST holders and the Luna holders. The UST guys don't really care about Luna price. They'll, hyperinflate this thing away and exit as much as they can to get as many cents on the dollar as they can. While the Luna guys, I think they have more, Luna holders, I think they're more long-term oriented. They're thinking about, well, now without this kind of algorithmic stable coin, we just have an L1. Maybe that's still, so there's some value there. And we want to make sure that all of that is protected. And then, just transforming the algo stable coin into collateralized one, there might be some value there. So, long story short, I think, Luna, I think, could be more valuable than, 1 tick above zero, but we won't see that price discovery until all the bad debt is digested from the system. Right. Well, we do see ARCA has doubled down on investing in the Terra Luna ecosystem. That's interesting. But, we got to wrap there, Kevin, but I just really quickly want to ask you, do you think Zhou is going to walk away from this a rich man? Should he go to jail?
I think for the sake of our the history books and for our industry and generally the welfare of our industry going forward, I would say that I think that they tried a very ambitious experiment and it failed. And I think most people along the way had good intentions. For Zhou himself, I don't want to impute his motive. I hope that for the most part they were good. As brash as he is, I hope that for the most part it was good. I personally wouldn't want to see the guy go to jail. That's my own opinion, but I think that that's not left for me to decide. And I think that's for the public to decide, and I think that's for the judges and the jury to decide on that.
All right, Kevin, thank you so much for joining us. Appreciate your evaluations and your insights over the past months. It's been difficult for you, I imagine, but in the end, you're right. So that was Galois Capital co-founder Kevin Zhou. Coming up, we've got crypto markets update with Germany-based MV Index Solutions. That's next. Live look at Bitcoin. The CoinDesk Bitcoin price XBX index at $28,188. Bitcoin falling back almost 4% over the past 24 hours. The CoinDesk Ether price ETX index at 1932, pulling back over 11%. And the DFX CoinDesk DeFi index is getting pummeled down about 25% and change at 124.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Certainly a tough day for investors, and joining us now to discuss the crypto markets is Martin Leinweber. He is a digital asset product strategist at MV Index Solutions. Good morning, or good afternoon to you, Martin.
Good morning. Thanks for having me.
Thank you for being on. As we talked about earlier on the show, we're seeing across the board all sorts of, all the cryptocurrencies basically being crushed today. ETH down about 20%, Bitcoin down about 11%. As our previous guest, Kevin Zhou, discussed, he said that he believes that some of it was selling on behalf of funds that had been heavily invested in Luna. Is that necessarily the case, or were there other reasons besides the Terra Luna fiasco that led people to sell their crypto? Is there a loss, or is there a loss of confidence in the markets?
Well, that's a good question, and I think it's still macro related. And the big question is, when does crypto decouple from traditional markets, especially equity? And if I just look at what happened in the digital asset space over the last days, we see a lot of signs of capitulation. So we had massive volume spike in Bitcoin. We have forced selling of alts. You mentioned it, the implosion of an algorithmic stablecoin, and even witnessing participants selling today their tether to market makers in extreme fear. But unfortunately, we don't operate in a vacuum, but have to watch out what the Fed is doing, and in a consequence, the US dollar and interest rates. And to put things into perspective, we've lost $35 trillion in global market cap value since the beginning of the year. And that's 14% of all global wealth. And this includes the $1 trillion losses in crypto, but not non-financial assets such as housing. And for reference, in 2008, it was a 19% decline. So for me, it's all about the inflation. And with President Biden saying that inflation remains unacceptably high, and he's confident that the Fed will do its job on inflation, it's all on Jay Powell's shoulders. So the Fed put his gun. And the question is crypto bottoming first, followed by equities? Or will traditional risk assets drag crypto lower as the correlation stays high? And when the economy enters a recession, markets overreact and drop well below the trend. So we have to watch the NASDAQ further carefully. And if investors price Bitcoin, for example, this way, and they do it at the moment, Bitcoin could fall well below fundamentals and long-term trends. So watch the correlations, watch what commodities are doing. And I think we need a deflationary moment again before we can have a sustainable turnaround.
So it sounds like you have a very fairly bearish outlook, a lot more bloodletting to come. So do you have a bottom, let's say, in Bitcoin and ETH?
But I think the bottom, as I said, if you just look at crypto, you can make the argument that we are near the bottom at the moment. But it's really hard to say. I would further focus on what are doing the blue chips versus the altcoins, for example. And if I just look over the last 7 days, we see blue chips, Bitcoin and Ethereum outperforming versus, let's say, smart contracts, which were losing 31%, metaverse gaming, even over 50%. So I would watch the Bitcoin dominance. We are at the moment at around 45%, but I can imagine that a figure between 50 and 60% is maybe a clearing level for alts. And in this environment, we just see consolidation in token activity. So watch out for catching a falling knife. It's definitely time to be conservative, I would say.
Is there anything that you're noticing in the alt market that kind of stands out from the trend? Because, as you noted, they're sort of moving together for the most part. But are there any alts that are performing either better or worse than expected, or who are defying this larger trend, or are they really just all same?
That's an interesting question. So if you would have asked me these questions 2-3 weeks ago, I would have confidently said that smart contracts are still holding up quite well, all the base layer 1 chains. But this is completely gone. So we have the old relationship of having Bitcoin as the less risky assets in the crypto space, followed by Ethereum, and all other altcoins are in another league. So I would still think that as long as we don't have priced in the recession fully in traditional markets, it will be really difficult for altcoins to shine. So investors will still focus on the Bitcoin and Ethereum, on the blue chips. And I would say even, and what is interesting, and this relates to the UST question, or which you had discussed in the session before, there's even a price differentiation between other stablecoins. So this morning we have seen that Tether, for example, was below $1, trading at 95 cents. So people sold Tether and even went in USDC or DAI in order to be in the better, so to say, better stablecoin. And this is something which is quite new and which shows you how extreme and how panicking the whole crypto market is at the moment.
Speaking of which, the EU Commission is apparently favoring a ban on large-scale stablecoins, according to a document. We have a CoinDesk report on it. And originally it was meant to target Facebook's now abandoned Libra project, but now it could filter off to other cryptocurrencies. And I wonder your thoughts on, do you see that happening?
I think the action with Terra Luna was definitely a trigger for more regulation to come. Well, here's the thing. No government wants unregulated stablecoins. So all those stablecoins are borrowing the unit of account from central banks, mainly the Fed, as we have a dollarization of the stablecoin market. So we see more regulation in that area going forward. And if you're honest, it could be seen as a bank product. Yes, so you get something back at par, you get an interest rate, it's in US dollar, so it looks like a bank product, it smells like that. So the key is, for example, if you own Bitcoin or Ethereum, it's not somebody else's liability. But building a derivative on the US dollar is not the same, or maybe on the euro. Yeah. And at the end of the day, it will be a net win for the industry. Why? Because even if we have CDBCs, which we don't like, or fully regulated stablecoins, I think they will be ultimately settling on crypto rails. And so we have to end this question with a positive note, I guess. And so I think net, it should be a win. but the incumbents will everything they have to do to slow this development down, I guess.
All right, Martin, thank you for your insights. That was MV Index Solutions digital asset product strategist Martin Leinweber. Coming up, we've got blockchain analytics firm Chainalysis doubling its valuation and another huge raise.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Blockchain data firm Chainalysis raising $170 million, doubling their valuation to $8.6 billion. Joining us to discuss this and other on-chain trends is Michael Gronager, co-founder and CEO of Chainalysis. Welcome, Michael.
Thank you.
So let's start with the elephant in the room. Well, there's kind of a lot of elephants in the room, but the biggest one being UST and the debacle over the past few days. I'd be curious if you've seen any on-chain data or on-chain trends that would shine any light on this incident.
So I think there's a lot of things that has been discussed. One of the things that we always monitor is what is happening on inflows to exchanges. Are we see whales leaving? Are we seeing whales liquidating and so on? We haven't seen any trends of that right now. It still seems to be retail driven. I would also say what happens in the traditional markets right now, where you see blue chip shares like Amazon, Coinbase, a lot of others are basically falling in free fall. That's what's happening there is basically that no one is buying. People are selling, not more than usual, but no one is buying. Everyone just stays and waits and wants to see where this ends. And I think the same thing is happening in the crypto space. Retail investors are selling, and that makes the price go down. But if you then look at Luna and UST and that problem in particular, I think Kevin did like a very, very good overview earlier today of some of the issues that has been part of that story. And I'm pretty sure that our team is working intensely to see if we can find anything that would cast even more light on this.
So I just want to zoom in a little bit on what you said, because there have definitely been other reports saying that institutional investors are playing a big role in this kind of current sell-off. For example, with the influx of institutional investors in the market, that's when we started to see a higher correlation between crypto and the equities market, right? Because you basically have these institutional investors kind of involved in both. So are you saying that institutional investors are not the pivotal force in what's happening in the crypto market and also in UST? Because for UST, there's also reports of hedge funds, coming in and like trying to salvage from the wreckage. So if you could just tell us a little more about the specific role of institutional investors, both in the crypto crash and in UST, I think that would be really interesting.
Yeah, so on the institutional investor side, I would say the traditional ones, I think some big names were mentioned as potential causes for what happened with the UST. They haven't even entered the space yet. It's like the real big hedge funds and so on haven't gotten into crypto yet. Some of those who have are clearly looking at the space, and when we look at the blockchain, we look at like big wallets, see how they move, what is happening on that front, and what we see there is not really confirming that this is being driven by whales. So I think that's roughly what we see today. That of course can change. But I also think it's important to remember that what has happened over the last, I would say, 2 years or so on, is this Robinhood trend of financial markets, where a lot of retail investors have kind of gotten more things to say. And we see that they are becoming a bigger force in the financial system. And whatever happens there, whatever trends that happens in the other market will definitely cause them to liquidate and mimic what they see in the traditional markets, also in the crypto side. So I think it's more that what we are seeing right now.
We saw that you gave us a couple of charts. One was on BTC dominance and another on year-to-date performance of Bitcoin, smart contracts platforms. Perhaps you can go over, what you see in these trends.
Yeah, so the trends is that clearly BTC is still seen. So typically all of crypto are what I would call risk-on assets. So it means that as soon as the market is more risk tolerant and wants more risk, then they move into crypto. Of all the crypto assets, Bitcoin is usually the one that's like signals less risk, so more like a risk-off assets in all of the high-risk assets that we have here. And we usually see that like people go to Bitcoin if everything else is unstable. And I think what we have seen today, and at least like my observations, is that typically more people move away from ETH and into Bitcoin that we've seen right now. And right now, I think that my conclusion of the market right now is that ETH have actually become an even more behaving as Bitcoin, as seen as a less risky assets right now, and even in the time right now. So the average value from Bitcoin to ETH is typically somewhere between 12 and 15. Right now it's 14 point something. And I would say that what we are seeing on that trend is that like it could have gotten down to 15 or 16 or so ETH per Bitcoin, but it hasn't gone that direction. So I see that ETH over the time have matured. And it's also, I think one of the things that's important, I don't look at things in the view of short-term trends, because I see that the crypto, what we are building in crypto is really a long-term trend, and the big picture is important. So something that many might find a little bit fringe is something that I would obsess about, and that's basically what's the stability between Bitcoin and ETH, and how is that moving, and that I see is like a sign of an industry that's maturing.
So you basically, your company now is worth $8.6 billion, and you raised about $170 million. What are you going to do with the money? You're not buying Luna, I assume. I mean, what are you doing with the money instead?
No, we're not buying Luna. What we're doing with the money? So basically, we are seeing a very high demand from customers for products and services based on data. How do you better understand what happens on chain? Many things of finance have moved on chain today. We see DeFi. DeFi is basically exchanges that moves on chain. So many things happens there. So there's a lot of demand. When we see a lot of demand, we need to build more products. We enjoy building more products for customers. So we're investing in building products for sure. But also, crypto has always been global, and we are trying to expand in a global way. So we are doubling down on offices in throughout Europe, in APAC, and also in South America. So clearly investing in global growth and ensuring that we can serve customers on a global scale.
So I actually, when you say there's more demand from customers, I guess I'd be curious to know like what kind of customers. And as you know, one of the controversies surrounding a company like Chainalysis is that, that tension between, okay, Bitcoin is or cryptocurrency, it's not fully anonymous, but it's supposed to have some degree of privacy, right? And then Chainalysis kind of whole MO is sort of like breaking down that privacy to a certain degree, right? So I guess the question is like, what are some of the, where's the demand coming from, and how do you sort of manage that tension?
Yeah, so I believe that like the core value proposition in crypto is basically financial opportunities. And I think what we have seen over the last many years has only proven that to be the case, right? So we've seen a lot of interesting financial instruments verging to the point that we call them experiments. But a lot of that has happened, and that has been a core driver from the value generation in crypto. Less so, we have seen privacy coins and coins really trying to be 100% anonymous. They haven't driven the value. So the big value generation in crypto haven't come from privacy features. So I have to say, I don't believe in the thesis that crypto is built for anonymity. It's more like built for financial opportunities. So that was answering one part of the question there. Around our customer base, we clearly have a quite diverse customer base. We have like more than 150 government institutions in 35 countries in the world. And that's more than half of our revenue today. So to say that is growing at a high rate, and it's growing because crypto is maturing. It's growing because it's probably more important today to have access to a Chainalysis license than a police car. The world has moved online, and it's pretty clear that also governments want to ensure that how do we regulate? We can't regulate without data. How do we understand what happened with UST? Well, we need access to data. We need to drive all of this by data, and that's a very positive news, I think, because the best thing is informed regulation and having the public sector being informed. So that is clearly one part of our customer base that's growing.
All right. Well, Michael, congratulations on your raise. We've got to wrap it there, but it's good to see one crypto company thriving despite the bear market we're seeing out there. So congratulations. That was Chainalysis CEO Michael Gronager. Let's check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So we've got a couple of House hearings that you're watching. Tell us about them.
Good morning. Yes. So in just about 20 minutes or so, the House Financial Services Committee is going to be meeting with Treasury Secretary Janet Yellen to discuss the Financial Stability Oversight Council and what it's up to. Unclear if we're going to have a lot of crypto in this one, but Janet Yellen brought up UST, TerraUSD on Monday during a similar Senate hearing, unprompted. Excuse me, I think that was Tuesday actually. But clearly this is something that's going to be on her mind. I imagine, given that between Tuesday and today, a lot's happened in the market. A few lawmakers might actually ask some more questions about it. Meanwhile, over in the House Agriculture Committee, they're going to be holding a hearing on FTX's proposal to disintermediate settlements of certain derivatives products, particularly crypto derivatives. And, we're seeing a lot of conversation around this from, both the crypto sector as well as the traditional financial industry. Some of the traditional financial players are a little bit cautious to oppose on this proposal, so I imagine we're going to be hearing, a lot of the arguments for and against this proposal over the course of the hearing.
And Nick, can you just shed a little more light on this report about the EU looking to ban large-scale stablecoins?
Yeah, so it's really a ban after certain thresholds are met. So what it appears is that the European Commission is considering a proposal to basically try and enforce artificial curbs on stablecoin transactions. If a stablecoin hits 200 million, I believe, euros worth of transaction or 1 million transactions in a given day, the European Commission is looking to implement some kind of a law that would ask the issuers to basically cease issuances for some cooldown period, basically cap the number of transactions that are possible in a given day. We don't have a lot of details on how this would work or what this would actually look like, but this is something apparently that the EU reportedly is really looking into, really favoring. And so I imagine if this becomes something that becomes publicly discussed, we're going to start hearing a lot more about this. And there's going to be a lot of questions, especially about the technical feasibility about how this would all actually be able to work.
All right, Nick, thanks for updating us on all things regulation. Appreciate you coming on the show. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Let's check in with Crypto Twitter for our tweet of the day. And this one is from Kevin Zhou's Galois Capital. He's one of the many firms mentioned before being accused of conspiracy theories of bringing down Terra Luna, but Galois Capital tweeting, Zhou, the creator of Terra Luna, I would have liked to say that by my hand, Luna UST has died, but that's not true. By your own hand, they have died. What follows is a very epic, I told you so. All right, that's it for First Mover. Thank you, Emily. Thank you, Lawrence. I'm your host, Christine Lee. Meantime, check out the hash at noon Eastern, as well as all about Bitcoin at 3 o'clock Eastern. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
The crypto market may be in turmoil, but South Korea is forging ahead with its crypto plans. Welcome to the Daily Forecast, May 12th, 2022. I'm Megha Chadha of Forecast, covering all things blockchain. South Korea's new president Yoon Suk-yeol made a number of pro-crypto promises during his election campaign. And despite only officially taking office on Tuesday, according to a leaked report, he's already acting on them. We'll take a look at that plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with an update on Terra. The algorithmic stablecoin UST briefly climbed above 80 US cents Thursday morning in Asia after Terra proposed a network upgrade to increase supply of its native token Luna. The UST is minted by locking Luna, meaning Terra intends to concede Luna's value in the hope of saving the stablecoin's peg to the greenback. In a series of tweets, Terraform Labs founder Do Kwon said the increased Luna supply will be sold on the open market to raise funds and rescue the UST peg. Kwon admitted that the cost of the plan would be high to UST and Luna holders, but added that Terra is also seeking external capital sources. Luna had dropped to $3 by the time the recovery measure was announced and had fallen below the $1 mark by Thursday morning in Asia. The fiasco has led to concerns over the feasibility of algorithmic stablecoins, with the broader market in turmoil. Indeed, major cryptocurrencies were down Thursday morning in Asia, while the Nasdaq Composite finished down over 3% on Wednesday. Forecast Carolyn Wright takes a look at the market action.
Wall Street fell on Wednesday after the latest US inflation data showed that the Consumer Price Index, or CPI, rose 8.3% in April as compared with a year ago. Despite a slight easing on March's 40-year high reading of 8.5%, investors were still spooked. One expert told forecasts that stubbornly high inflation and the threat of higher interest rates have led to a complete risk-off environment.
Now, more aggressive rate hikes into year-end is something which equity markets and crypto markets have just completely unravelled about today, and more so in the cryptocurrency space because of what is happening with Terra. So obviously the breaking down there from its from one, there was obviously some large outflows that went through the stabilization mechanism, the algorithm there which kept it pinned to that level. It's broken down, and now we can see with Terra sitting around 26-27 cents. I think it's irreversibly broken. I can't see it coming back from that. Having gone from $77 6 days ago to 26 cents, that is a broken market.
Sycamore says there's only one bright spot for investors right now.
That is the US dollar, because the US dollar and US investments, the interest rates on cash investments there are pushing higher. We're looking at interest rates now out towards the 10-year at around 3%. Gold doesn't yield us anything, so there's no flows going into gold. And this is where I think the money is going at the moment. It's going into US dollars to get exposure to real interest rates, because there isn't many countries with real interest rates, and it's affecting everything. Gold, equities, cryptocurrencies, you name it. The money is going into one spot, the US dollar. The US dollar is king today.
As for Bitcoin, it dropped below $28,000 Thursday morning in Asia, but has it hit a bottom?
I'm still thinking that this is about the right level that Bitcoin should stabilise, but I need to see signs of basing. And by signs of basing, I mean I need to see Bitcoin get back above 30,000. If we were to see that, I would then say that today has just been capitulation. Capitulation is one of those things you see in markets which often precedes a recovery. So today is capitulation day. We've broken through 30,000. We've broken through the 28,800 low from last year. We're now into fresh cycle lows, and that really just signifies people saying, stop the pain, get me out. It is capitulation. But to signify that the capitulation is complete, it has to get back above 30,000 in the coming session.
Sycamore also says that for the moment, the correlation between crypto and equity markets is set to continue. But once the Fed takes its foot off the pedal later in the year, individual cryptocurrencies will then begin to trade on their own merits. For Forecast, I'm Carolyn Wright.
Over in Australia, after a last-minute delay, the country's first 3 cryptocurrency exchange-traded funds, or ETFs, have now gone live, bringing Bitcoin and Ethereum products to the stock market. One of the funds, the Cosmos Purpose Bitcoin Access ETF, tracks the Purpose Bitcoin ETF on the Toronto Stock Exchange. The other two funds, which were launched by Australia's ETF Securities and Swiss 21 Shares, spot trade Bitcoin and Ether by tracking the underlying asset directly. The ETFs had been scheduled for launch on April 27th, but brokerage concerns caused a delay. In response to that postponement, Cosmos said it won't charge investors fee on their funds for 2 months. You can find those stories and more at Forecast Top News. Meanwhile, in South Korea, the future of cryptocurrency is looking bright. According to a leaked report, the country's new administration under President Yoon Suk-yeol is working towards the institutionalization of the digital asset by 2024. Forecast Danny Park reports.
There's no stopping South Korean President Yoon Suk-yeol in making good on his campaign promises for the crypto sector in the country. Based on a leaked report, the new administration plans to establish a new regulatory framework for crypto institutionalization to go into effect by 2024 after establishing legislation next year. The new administration intends to develop a bill for Digital Asset Basic Act this year. The Yoon administration has confirmed the validity of the leak, but added the draft is not final. The draft includes measures to protect investors and stabilize transactions by regulating issuance, listing, and market activities of digital assets, including NFTs. It also reportedly includes reviewing the development of the nation's central bank digital currency. So what developments can South Koreans expect from here on? One expert told Forecast not to expect much for now, as more discussion is needed for the bill.
기본법에다 무엇을 담아야 될지에 대해서도 지금 컨센서스가 없어요. 그리고 지금 한국의 국회의원들도 일단 6월 2일까지는 아무 일도 할 수가 없어요. 그 지방선거가 있어가지고 그래서 이제 그 이후에 진행이 될 거기 때문에 업권법에 어떤 내용을 담을 것이냐 이것은 앞으로 좀 더 논의가 필요한 그런.
Kim also noted that the leaked report mentions the government will follow the global movement on regulations.
그 국제 정세에 발을 맞추겠다고 하는 것도 잘 보면 그 레퍼런스가 BIS나 FSB 같은 곳이에요. 이런 곳은 금융 안정성을 가장 우선으로 하는 그런 기관이거든요. 그러다 보니까 산업의 진흥보다는 금융 안정성을 해치지 않는 국제 공조를 염두에 두겠다.
Now, whether the bill will be enacted into law or not lies on the hands of the legislators. But with Yoon's backing, crypto investors can put their hopes high. For Forecast, I'm Danny Park.
It looks like a fire sale in the world of cryptocurrencies, with Bitcoin breaking the $30,000 mark and ETH hovering around the 2,000 level. But El Salvador, the world's first country to make Bitcoin legal tender, has used the dip to add crypto to its coffers. But is making Bitcoin legal tender actually furthering its adoption in the new economy? Let's find out from Mark Lamb, Chief Executive Officer at CoinFlex, a leading crypto derivatives exchange and yield platform. It's great to see you again, Mark.
Great to be here.
Mark, the countries that have adopted Bitcoin as legal tender have got a lot of criticism, including from the IMF, which has said it could further financial instability. Central African Republic, one of the poorest nations in the world, has become the most recent one to bank on Bitcoin. But does a move like this translate into crypto adoption? A report recently showed only 20% of El Salvadorians continue to use their crypto wallet after spending the initial free bonus that was offered by the government.
An issue with using something like Bitcoin, BTC, as a payment in these Latin American and African countries is the fees. The fees on chain are often several dollars, often $5, $10 to spend Bitcoin. If you're making a small amount of money, if you're making $2 a day, a $1 fee is like, a few hours, 5 hours of your time. It's a lot of money. It's a high fee. And so these fees end up pushing people to relatively centralized payment providers. And the issue with that is you can't tap into the peer-to-peer liquidity. It makes it more difficult to convert to cash. it just limits your options. You know, the point of a blockchain is to be able to be decentralized and be able to have people transacting peer-to-peer on it as cash. And so I think this is where, you know, cheaper blockchains like Bitcoin Cash and other things like that would be a more, you know, more suitable mechanism of payment for some of these poor, impoverished countries. I think there are a lot of reasons to move away from local currency. There was a recent study that came out that said that majority of the world is living in double-digit inflation right now. What you'll see is a move towards crypto, but I think it's going to be two things. I think it's going to be things like Bitcoin Cash and other currencies that have very cheap transactional mechanisms, and I think it'll also be stablecoins, because stablecoins track to the value of the dollar. In the case of FlexUSD, you're also earning interest, and so things like that are probably more likely to get adoption than Bitcoin BTC, because, you know, the ability to transact first class on the network is very important.
We are also seeing a lot of innovative use cases emerge in Latin America. One report says that 1 in 5 Argentines have used crypto. What's the driving factor here?
A lot of these countries don't have a very strong local currency, don't have a very strong central bank. It comes down to inflation. You know, if you're an Argentine and you've seen over the last 100 years, I don't know how many times, but it's been many, many times, probably more than almost any country in the world, the entire currency has just been completely wiped out to inflation. You don't trust local currency. You probably don't even trust the dollar. But at the end of the day, they value, you know, things that are safe havens. But if you're not rich, gold is hard to get in a way where, you know, you can easily store it and you can easily do certain things with it. You know, Bitcoin, crypto, this is the way forward. This is where you can actually, you know, get a meaningful amount as a small individual and an everyday person, and you can protect yourself. And so I think it's only natural that anywhere that's dealing with double-digit inflation, which again is the majority of the world.
Interestingly, the governments in these countries seem to be pro-crypto, unlike the conservative wait-and-watch stance we've seen in the United States or the European Union or even India. In fact, Buenos Aires is happy to accept crypto for making tax payments. What explains that dichotomy in the different approaches at state level?
If you think about a country like El Salvador, St. Kitts, Central African Republic, many of these, Argentina, the citizens in Argentina, many of these countries don't actually have a lot of ties to the U.S. banking system, or don't have very privileged access in the U.S. banking system and the U.S. dollar financial system. And really, they're ultimately, their citizens are looking for an escape. And so a government, you know, can only not listen to its citizens for so long. It at the end of the day is at the behest of its citizens. And so if all the citizens are saying, look, we want crypto, we want to escape from inflation, we want all these things, you know, at some point the government has to listen. And I think also in some cases, the governments are getting some publicity and maybe people moving there and other things from the crypto space. So crypto is becoming a large economy, and you know, it's not the biggest by far, but it's a multi-trillion-dollar market cap. There's a huge amount of economic activity in the space. That as that grows, it becomes more of an incentive for more governments to be friendly to it.
It may not be big right now, but digital currencies are certainly a giant in the making. Thank you as always, Mark.
Thank you for having me.
And finally, here's a sneak preview of the latest edition of Word on the Block, where we go beyond the headlines. This week, Sam Bankman-Fried, billionaire founder and CEO of FTX, and Amy Wu, who heads the $2 billion FTX venture fund, join in to talk about the need for a crypto regulator and trust levels in stablecoins.
If there was a clear, if we knew who it was who is overseeing these marketplaces, like what agency is it, And so that's sort of another piece of this that they think about. They think about, well, how about the assets? How about stable coins? Can we trust them? Like, and I'm like, I think like these set of stable coins are, really upstanding companies, and we use them heavily and sort of have trust in them. Like, great. Is there like a, are they registered? The answer is, well, no, there's nothing for them to register as right now. And as money transmitters or something, but like, again, that's not really what they're asking. And so I think there's a lot of pieces here where like, they don't know exactly what it is they're looking for. It's a holistic thing.
It's not necessarily that the technology is the best, but you're sort of capturing the zeitgeist and culture, and that's absolutely what's happened with the Bored Ape Yacht Club NFT collection, for example. Yeah. Like this is the most popular collection in the world right now, and I got to know the team some months ago, and the community was thinking about like launching the ApeCoin DAO, right? And so I was asked to join the board of that, and was totally thrilled to, because it was at the time, and it is now, one of the most visible experimentations in decentralized autonomous organization governance of one of the most valuable IPs right now in the Web3 space.
The full episode airs tomorrow, so do check it out. And that's the Daily Forecast. And if you want a deeper dive on these stories, the Daily Forecast is also a newsletter now. You can have it delivered straight to your inbox. Sign up at focus.news/newsletter. Thanks for watching. I'm Focus Meghachada. Until next time.